My name is Nick B, and let's get into this week's futures overview. I hope you had a great Father's Day today. Hope you had a great weekend and ready to kick off the new week. So, as always, starting with the Forex Factory economic calendar. Monday, we have Empire State Manufacturing Index. Tuesday, we have core retail sales. Retail sales is going to be a big one. Wednesdays, the market is closed. We are off. Thursday, we have unemployment claims in the morning. And then Friday, we have flash manufacturing PMI, flash services PMI. Okay, so there's going to be some action into this week. Let's take a look at the charts now. One thing I have to point out. Oh, never mind. Never mind. Look at this open. What an open. Basically, we're at 20,000 NQ and we're at 5,500 ES. Wednesday is, I believe, Juneteenth, a holiday, so I believe the market will be closed. But wow, what an open! Wow. Okay, so well, it hit all the targets to the upside now. Now I need a fresh slate, and now I need to kind of reassess what's going on here. Let's start, as always, with the daily, and let's understand that this is a gap here, a massive one, and in part, this is contracts rolled over. So, are we going to fill this gap? We might not. We really might not. We might not look back from here. Maybe at most come down to 45.50. Maybe, but I think there's a really good chance that we don't look back and we don't fill it. And the reason I say that is because if I pull this up on the 2-year daily, if you guys remember, when this bull cycle really started, the bull market was at 46.30 ES. Why? Because that was the second lower high to reverse the trend. Once we got above 46.30, I mean, look at that. We really never looked back. And we're in a similar setting right now as we were here. We had a scary pullback, right? Scary pullback earlier this year. Recovered it, broke out of it, made new highs, and now with the contracts rolling over, we're gapping up again. Same thing happened here. And we're not really looking back. We didn't look back. We still have this gap here. So can that still apply to us? Maybe. With that said, let's take a look at the facts. Okay, so we're making higher highs and higher lows. We're bullish. This is an uptrend. So right away, I'm anticipating that it's probably more in my favor to look at long setups and look at buying the dip than trying to keep continuing calling a top up here, which I won't be doing. I don't think we're anywhere near a top just yet. But with that said, let's break this down to the floors that we were in between. Now, previously, I had a resistance over at 53.30 and a support at 49.60, and I understood that a break above either or of these levels would anticipate the next direction we take on. Okay. With that said, we broke above 53.33, made new highs up at 53.66, made a new higher low over at 5200, and we ended up breaking out the highs last week of 53.68, reaching our target of 5400, holding around that area into last week's close, and here we are with a beautiful gap up with the new contracts. Okay. The best thing I can do now is really break this down to the 4 hour because the big picture, really, the daily can't tell me anything but kind of reiterate to me that this is a bull trend. We're going higher. So I need to take a closer look. Right here at 53.68 and the lows of 52.06, that was going to be our next tell of where we're going to go. Obviously, as you can see, we broke out. We're heading higher. We had a beautiful retest of supports. And we created a new floor, at least small time frame, 54.54 to 5400, basically a 50-point range on ES. Of course, with this rollover here, we're going higher, and the only thing I can kind of keep putting together in terms of upside targets is understanding that the S&P ES likes to move in 20-point increments intraday. So as long as we can hold 5500 as support, my assumption is I'm going to be targeting 5520, 5540, 5560, 5580 until I get to 5600. Now, if we end up breaking below 5,500, if we end up coming down to 54, 54, let's see if that can hold as a support. If it fails to, maybe we see this gap fill. But again, kind of going off of what we've experienced more or less in the beginning of 2023, when we had those, I mean, excuse me, the end of 2023 when we had the contract rollovers and when the bull cycle, the bull market initially started, we never filled that gap down. So we might not fill this gap down either. But again, 50 points is a broad range. Let's see. In order for me to anticipate more downside, get me below 53.30. Get me below 53.30. It is on the 4 hour, the second higher low. Also, when the second higher low tends to break down, especially on the intraday, it can give way to a possible short term trend reversal. So I would assume that once we break below 53.33, we could have room to come down to 52.50. Below 52.50, make our way down to the floor of 5200. I don't want to focus on too much downside. Again, it falls into reasoning of timing. I don't do that. We don't do that. No timing. We need a breakout or a breakdown. Again, new price discovery here. If we can manage to retain 5500 as support, most likely we're going to end up at 5600. Could be into the end of this month. Or yeah, most likely no, could be into the end of next month probably already, or maybe this month. We'll see. I really have to see, before going long. We gotta give it until Monday. Get me to Monday's open. Let me see how we develop here because again, this is a totally new area. It's really anyone's guess where it could go, but given on the big picture that we're trending higher, making higher highs and higher lows, we should assume that we're going to go higher. And I'm going to be targeting ES in 20-point increments. Round number theory is good for 5,500, 5,550. Then from 5,550 to 5,600, we can assume those are very strong psychological support resistance levels. They are those round numbers. But again, keep in mind that ES, it likes to move in 20-point increments. So maybe we'll only get up to 55.20 and then we reject, or maybe we get up to 55.40 and then we reject back down. Gotta play it easy here. Let's see if this gap fills or not. That's really it with ES. You can't pick out too much from here to do. You kind of just gotta let it settle. Let's see what happens. We're gonna be going over in a similar space with NQ. This is a bit tough. We have to take a look at also the dollar. I understand there's some indicators and quite a few gauges that were showing us that we were overbought last week, but of course, when we are in all-time high territory, we can assume that we're going to be overbought because it's areas we've never seen before. And the longer we stay in these areas of new price discovery, of course, the assumption is that we are overbought, but that should not be the leading kind of indicator that tells you where it is price action is going to go. Because at the end of the day, if we haven't broke down anything yet, how can you confirm where it's going to go? You can't. With that said, let's take a look at NQ. So really, again, to reiterate, my first support is 54.54 on ES. Not sure if we can fill this gap. If we do, great. We should end up going higher. And I believe my first sign is if we can get above 55.20, most likely we're going to have more fuel to head up higher. We don't need to break this down to the 1 hour. Really, I mean, we can, but it's not going to tell us anything here, anything we don't know. With that said, moving on to NQ. All right, so same thing. We'll pull this up. It's amazing. Wow, 20K, we're right there already. That's cool. Very cool. Okay, so we're making higher highs, higher lows, same thing. It's a bull trend. We're trending higher, and we just reached a massive, massive area with these contracts rolled over, a new all-time high of 20K. If we break above 20,000, honestly, I think it's the party's over. We're going to begin targeting on the long term probably 20,500. But given that I mean, excuse me, NQ likes to move in roughly on clean days, 250 to 350 point increments on the day, especially when we're breaking out or breaking down. Again, my assumption would be is if and once we get above 20,000, I'll be looking at 20,001, 20,002. And this is where I would actually tweak it because again, understanding that NQ likes to move in 250 points to 350 points increment on a regular intraday move. My assumption is if and when we get above 20,000, really the ideal first target is going to be the middle ground of 20,250. And then above 20,250, we're going to be aiming for 20,500. In between those increments, of course, we'll be applying and taking a look at the round numbers of 20,100, 20,200, 20,300, 20,400. The reason is they're round numbers. That's kind of what we're going to use as a gauge. Can we continue higher or can we not? If we begin to stutter halfway through, let's say at 20,100, where we don't see enough strength to continue higher, well, okay, we can pull back a little bit, wait for a decent dip, and then go off of that without having to anticipate or time whether price is going to go higher or not. Again, coming back down to here with the gap fill, it's possible we don't fill it. We did that exactly in towards the end of 2023. It's very possible we don't see it. It's very possible into the this month we continue up higher, and then somewhere maybe into fall we see a decent sized pullback and we retest that area. That's just a scenario there. That's just a scenario I have to throw out there to consider. On the other hand, I think it's a little bit odd that on the daily, the closest possible indicator for support over at 19,000, 19,001, which is my 20-day EMA, I find it odd that we're about 1,000 points away from there. For us to even reach that and solidify that as support, I wouldn't really hang on to that and I would not build a bias on, oh, that's going to be where we're going to retest the area and bounce off of it. I would not hold on to that because for the last 3 weeks, every time we've been making new all time highs, breaking out, and sometimes not even giving a chance for price to solidify that support. Price has just shown, resilience. It just keeps going higher. The dip keeps getting bought, and we keep going higher. That's the fact. With that said, let me identify kind of the floor here that I see. On the daily, I can't do much here because the fact is, once we broke out above 18,700, we made the highs over here at 19,022. And then we also created a new floor here, which invalidates 18,700 to 17,100. And that is the floor that we made of 19,022 and then 18,250. Either or, if we had broken out of either or level, that was going to tell us where we were going to go. And like we covered last week, if and when we broke above the highs, we're just not going to look back. We're going to go for 19,250, 19,500. And again, it's pretty awesome to see that just over the weekend with the contract rolled over, we're already at 20,000. That's wow. I mean, that's wow. So with that said, I gotta break this down to the 4 hour because there's really not much else I can pinpoint here. And really, the fact of the matter is, on the 4 hour, this is the realest range I can get. It's either 19,500 and you get a breakdown, and NQ possibly comes down towards that 19,000 to 19,100 area, possibly, or we get a retest of these highs, maybe fill the gap and continue higher. The other outlier is we don't even see anything of this area, is we get a break of 20,000 and we just don't look back. That is a possibility. That's very possible. But let's see. I mean, it's all going to be on this week. We have really the main contender, I think, is going to be retail sales for this week. And Wednesday, given that the market's going to be closed, Monday and Tuesday are going to be, should be the powerhouse of the moves. Are we going to fill these gaps? Are we going to chill out, or are we going to go higher? My bias, even though I shouldn't have one. But the probabilities are all telling me that we're going to go higher, regardless of what they try to throw out here right now. A pullback, even if it's a 300, 400 point pullback, hopefully fueled by news, it should be in theory bought back. But again, We'll wait on price action to confirm what it is we're going to do. Ideally, I would love a retest of the all-time highs and I would start buying it there. I would see no reason to begin timing it to the downside. But again, if 19,700 is to break down this week, it could be very possible we attempt to test the higher lows of 19.5. And if 19.5 ultimately fails to hold as support in this new price level that we're at on NQ, we're going to flush lower. But as long as we're above it, I think the sky's the limit. With that said, really quick, let's take a look also at the VIX really quick. Pull it up on the daily, and it's mute, guys. It's really not doing anything scary. I understand we had this bit of a spike. What was it, last week, up to 1348, and it did apply some selling pressure. But on the daily, again, we're below the 20-day EMA. We're technically in tame territories, especially below 1348 and below the $15 level. So as long as we stay below here, the gauge reading could show us that, hey, we might keep continuing to get the dips bought. If the VIX specifically spikes above 13, really, I'd like to see it get to 15 or above 15. Okay, maybe that's a bit of concern. Maybe we could be seeing a short-term pullback and we could, you know, put a game plan together over that. But it doesn't seem like that's going to happen. Not yet. And the last but not least kind of gauge we have is what spooked us off last week into the middle of the week to the end of the week was the dollar. It wasn't really a great sight that we got above 105 and pushed higher. Ideally, we need the dollar to be a little bit more tamer down in these areas below 105. So let's see if into this week we can fill these gaps to the downside and if we can continue trending lower. If we can't find, any more supports to break down to the downside, and if the dollar decides to remain above 105.50, 105.70, and we continue taking aim towards 106, 106.30, most likely that's going to help us see a bit of a pullback into the market, on equities at least, and then we'll go from there. But with that said, again, this is a tough spot to really pick out direction, pick out any plays. It's really anyone's guess on what it is that we're going to do. Either ES is going to continue up higher towards 55.20 and we're going to go from there, or we really see the gap fill. Again, it's 50-50. As much as I would love to see us fill the gap and buy at these supports, I have to keep in the back of my head that that may not be a possibility at all. And mainly that stems from what we did back in the end of 2023, because I was looking forward to play specifically the breakout of 16,050, and on ES it was 4630, and I couldn't. It was a weekend thing. You had the contracts roll over, and by the time we opened up, play ball. We were on our way higher. The only difference though is I have to at least put this into perspective. If I zoom this out, the only difference was when we were breaking above 16,000, which was right here, 16,050, this lower high right here. When we were breaking above it, I actually had an idea of a target to the upside that we might take on when we gapped up to 200 points above where our resistance was, and we didn't look back for a gap fill. My automatic assumption is as long as it held, I can target the all-time highs, which was a previous lower high. Here, it's a different predicament. Here, we have nothing to go off of in terms of price action to the upside. We have to take on assumption of round number theory. So again, assuming we can get above 20,000 on NQ, we can begin focusing on 20,001, 20,002. 20,250 is going to be important on assumption that NQ likes to move in those 250 to 350 point increments. And then with ES, similarly, because it likes to move in 20-point increments, we're going to be looking at 55.20, 55.40. 55.50 is going to be an important middle ground. It seems to have been an important middle ground when we were at 54.50, at 53.50, I remember. I remember 52.50 was also a really important area for ES. So I wouldn't be surprised if 5550 as a round number would have some kind of psychological strength to it. And then above 5550, I believe the assumption is we're going to be going towards 5600 in 20-point increments. With that said, let's see what Monday brings to the table for us, and we'll go off of there after the news. We'll see how overnight does. If we still keep holding these areas, might just go long and target 5520 and 20,000 This is very exciting. New price discovery areas, and again, what this confirms is we're going higher. It's just the absolute fact. No matter the short-term pullbacks or swings, we're going higher. Um, because you would imagine with all the anticipation last week that maybe we see that sell off. I mean, it just totally got squeezed higher here, but that's a good thing. With that said, that's all she wrote. We have quite some work to do this week, and it's going to be a wonderful week ahead, and we'll go from there. With that said, I'll catch you on the chats. Cheers.